So in this video, we are going to first define market structure of cryptocurrencies, then the zones of market interest within the cryptos. Then the last but not least, the chart example, which is actually the most important topic within this video so that you'll be able to actually play it in your own charts. So market structure of cryptocurrencies, what do we mean by that? Like any other tradable instrument, cryptocurrencies follows the same manner of ranging, trending up or trending down. So an uptrend is basically a market which is presenting higher highs, and higher lows, higher highs and higher lows, like that. Then a downtrend is basically a market that is presenting lower lows or lower highs, lower lows, lower highs, and so forth. Then a ranging market is actually a market that is presenting equal highs and equal lows. So these are basic concepts of trading. If you have been trading forex, stocks, or even indices, they usually present the same patterns. So we must always try to participate in the market when the market is trending, and by the end of this video you will be able to do that. There's a popular saying that says, make the trend your friend and always trade when the market is trending. Never ever try to trade when the market is actually ranging. So an illustration of what we've just said is, in an upward trend we'll have higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So in this case, we would be interested in catching these points, and after catching these points, that is basically where we'll actually get the $100 in a day trading the cryptocurrencies. And in a downward trend, we will get lower lows, lower highs, lower lows, lower highs, and so forth. And as we have said, on the upward trend, we are looking to get in the market at these points. That is exactly where we will make our entries. But how do we do that? There are ways to do that, and that is what we are now jumping on next. So for us to determine a trend, we need to see what we call break of market structure. So we need to see a break of the previous lower low or lower high. And if this happens, we know that we may now be in a new trend, but we need more proof of that. That's why we need the next thing, which is the zones of market interest. So we need what we call the zones of market interest for us to actually participate in the market. So what are zones of market interest? These are the points where we expect to actually enter into the market, points of higher probability for us to participate within the market. Let's take, for instance, the market was actually trending down like this, right? In this case, we can see that this was a lower high, right? Up to this point, we had this as a lower high. So breaking of this level of the last lower high is actually a break of market structure. So after the market breaks this, we can safely say we may be in a new market trend. However, we need more proof for us to deem that correct. What is the proof? So the first thing that we need to see is creation of a higher high, right? Which is now a higher high. In the previous trend, we had lower highs. In this case, we have a higher high. After a higher high has been issued, we need a lower high, a lower low, a higher low like this. A higher low must be created. So these three things: the first thing, break of the last lower high, right? Creation of the higher high, and then creation of the higher low, are the three things that we need to see for us to say the market is now in a new trend. In this case, is now in an upward trend. So our point or our zone of market interest will be at the level of the new higher high. That is where we are expecting to participate and get into the market. So we need to see the market breaking that level and retesting that level for us to get in. In this case, that is where we'll actually open our wallets and buy some Bitcoins, Ethereum, or any cryptocurrency for us to possibly get our $100 in the creation of the new or another higher high point. Same applies if we are in a downward trend. Let's say we had an upward trend, right? In this upward trend, we had these higher lows, and this was the last higher low. Then on that last higher low, we can see the market actually breaking this level and giving us a hint that we may be in a new trend. We need to see a new lower low and a new higher low, and this becomes our zone of market interest for us to get in. That is where we would sell at this point and possibly get our $100 in a day. So for this to make sense, we need to see it on real charts and real markets. Let's jump over that the charts and see how this goes. So this is Bitcoin against US dollar, and you can apply it on any other cryptocurrency of your choice. The first thing that you need to see is actually breaking of structure. After breaking of structure and proof that we are now in a new trend, and you are good to go. In this case, we can see that the market was actually going down at this point. We can see the market was going down, and from there we had the last lower high. And mind you, this happened in December. This is 26 December 2021, and we had the last lower high. Then we broke that. After breaking of that last lower high at this point, we can see we had a hint actually that we are now probably in a new trend. Creation of this new high, and then after we create that new high, that is where we were saying it is the zone of market interest. You have to mark the exact highest point of the new high, and the market broke that high. Retest of that high is our entry point. So in this case, we were going to make our buy at this point, right? It's up to us that we actually wanted to see to exit at the new market high. And mind you, this is on the M15 time frame that we are making our analysis. Let's have another example, right? At this point, we could not get any tradable pattern, right? It's all about waiting in the markets. Then we had this as this was the trend. This was the last lower high. Breaking of that last lower high was actually going to give us a hint that we may be in a new trend. And after that, we can see the market pulling back, this becoming our zone of market interest, like this. This became our zone of market interest, then break and then retest of that zone of market interest was going to give us an entry point, which we can try to exit on the next high, whereby we see the market rejecting, proving that probably it's now at its high. So we could actually be getting $100 within these particular trades. You can see another example at this point. At this point, we had this as the last lower high, right? Breaking of that to give us this particular zone of market interest at this point, right? After that, let me remove this. After that, we could actually get our entry at this point up to the next high, right? So that is basically what you'll be looking for to actually make your money each and every day. Go on the M15 time frame, look for market break of market structure, you look for the zone of market reversal, actually the zone of market interest, sorry, and then you enter at the retest of that zone of market interest, and you are good to go, basically like that. Try this strategy on Ethereum against USDT, Dogecoin, Mana, Solana, any cryptocurrency of your choice. On that note, we come to the end of this video. Thank you for watching, like, and subscribe.